Hello and welcome. Today is Monday, 13th day of November, 2017. My name is Derek. Welcome. And silver charts, not really worth covering too much. And it's about adjusting to the message of the market. Sometimes the market tells you it's worth covering a lot. I do think it's a very good long-term purchase in the physical bullion variety. Scrap silver, I think, works well, but my favorite is 99.9% and greater or finer silver. But let's go over this on the 2-week time frame. This is back on January 21st of 2002. So over 15 years ago, $4.30 US per ounce. And I wish I would have even had the idea of knowing that silver was something that could be held in some sort of investment or even gambling measure. But I didn't. Not back then. But if we look at the chart analysis, this was in a downtrend for, at the time, since 1980. So that was a very long period of time, 22 years. I mean, it can't do much more than that, can it? It's at 37 now. But 22 years going down from 50. Well, it was at 355 many years even before then, around 1994 or 92 or some period. But on the short term back then, the declining 18 average and an attempt on September the 10th, interesting time frame of 2001. Then another attempt at the end of the year, so a sideways market had been established. You'd want to see a nice little clear break and holding and staying above 450 at that time. Market would have a move higher. Okay, so it's still correcting, but it's holding 440. I'd want to see it hold a little higher. Okay, there's 458, and we can see just back at this point, it would be worth talking about. The setup looks good. We have a strong resistance field in around 470-ish. We could probably make a move, probably up to the $5 range. Okay, there's that move. You can see technical analysis doing what it's doing, coming back to where it came from. Definitely reason to be optimistic at this stage. Now it's consolidating that $5 level for 4 periods, and there's your big crash. There's your big crash. Time to panic? Did you panic down here or? Ooh, so you see this resistance. It's looking bearish. I'm sure a bunch of people got scared out there. But a lot of this trading, of course, is of the variety of the digital format. Here we have the setup again. At this stage, we came to this level, and that was a harsh sell-off, but it's all been recaptured. Anyone who got scared and sold here, and oh my goodness, and they bought back higher, well, you lost. Anyone who sold in here, put buy orders back, maybe put sell orders in here, buy orders back here, your volatility is low, but the gains would be profitable. But the setup here would look very good. It had a break, comeback. You'd have to consider bullish behavior, and there it goes. Up to this previous level. I know there's not as much data in here. Could it go to 7? Of course, we know it does. And what I find interesting about the silver market is it does behave close to how the cryptos would when you have situations of such a long sideways movement, a long grinding market lower, and what you think are big down moves are nothing compared to the following up moves. This is where you get a situation of a red candle like this, and that's also normal in the crypto business, where if it just shoots right up like this, you have gains fall like this. I've seen so many markets go from like 5,000 satoshi to like 8,000 satoshi. Of course, I wouldn't be looking at a 2-week chart. I'd be looking at like a 20-minute chart or an hourly time frame, which is exactly why I like its trading mechanism. But You have a situation where you came back to this key level, volatility arises, and your first correctionary move within the band back in 2004, holding well, holding well, holding well again. Oop, not a great red candle down move, but it's good as far as the setup's concerned. It comes back down to this level. It's a buying spot, one would state. And look how good of a buying spot that would be, because the psychology to such is, if you're believing this is a correctionary move and you had the breakout on this period up to the 18 average of highs, where do you want to buy back? Where it came from, probably around 620. And with the bottom at 6, that bottom is a perfect hit. It would also mean that you would expect resistance at the next level at 8.5. If that area fails to be resistance, however, you know it's going to have a decent move. There's the move to it, not quite to it, and we can see a pullback where it came from. Again, buying opportunity, especially if you put a sell order in here. Oops, 775, I sell. Where do I want to buy back? Oh, where did it came from? Came from. About 675, 680. Okay, buy there. You bought it. And you have the interesting pattern of this nice higher low formation, this high, this high, this high, this high, all being lower, like a symmetrical type triangle. But you can see at the time there, this is a chart worth covering with very much bullish reasons to consider what we're seeing, the up move. Even with a small failed breakdown before such occurs, which is common within this business. And look at how this just goes straight up. And now if you're looking to buy, you have the 18 average, like 10 and 9. There's no reason to think that it's a good discount when you see it go from here to here, and it's just went up so much. And there you see the move right back down to the 18 lows. Of course, you'd be thinking, well, why not back down to here? Maybe it would. Maybe it doesn't. So there's a situation in again where you've built up strength within this level that was overbought back in April of 2006. You see, oh, that looks like a failed breakdown. Is it such? Yeah, it is a failed breakdown. And you would see at this time when it was 1349, this thing has a capability of going. And well, last time it went from like $8 up to like 14. This thing could go up to like 25. And in fact, it goes up to 21. And there's the 21. Of course, financial crisis was going on, but also people were starting to understand that the fiat currency system is a Ponzi scheme. At least I became aware of such probably somewhere around in here at around $15, $16. And the information was growing, and the silver bullion sales just started to skyrocket globally. And here's a situation in holding support, which was big, but huge fall. To the point where it goes below this low. Buying down at 11 seemed cheap, and quite frankly it was. Even if that was the lowest spot in which you bought, and for me it was. I pretty much, this is where I did buy around, right in here. I bought physical silver maples. But the price shot back higher. There was the 18 average correctionary test. And there's that situation of showing another good setup where you resist above the 18 average, you supported it for several periods, and then you have two breaks higher like this, leaving the 18 average highs. That's pretty darn near good setup that you can retest this previous congestion area. And it hit one high, came back to the lows, and that's exactly what it did, is retest that previous congestion area. Now in here, the market maintained an 18 average of lows. It never even touched it from the last lift-off point. It had several periods breaking above the 18 average of highs, but never able to make a break to even test the previous 21 level. But here's a spot where it made a high in here, breaking through, and continue follow through. You're at an area of previous resistance. You would normally think, okay, it's not that big of a size move from here to here. It's only a couple of bucks, but the time differential was pretty good. If there's any short-term pullbacks, you'd think 19 would come into play. And that wasn't happening. So not resisting where you're supposed to, and price action like we were seeing many times before, just having its move. When cryptos and silver are ready to go, these markets just go. And there's the 50 move. So the level of 50 got topped. The 18 average remained higher. So at this stage, when you're looking at $41.28 silver, there was a lot of reason to be bullish. And there was a lot of reason to believe that it could make another move higher. But holding this market was big at around the $32 mark. And it didn't do so well. It resisted it. Now we have the 18 average starting to go lower. And the pattern of grinding it lower, breaking new lows, back to a key area of support that was tested before at 26, rallying up to the decline, now up to the 18 average highs, but first step, band flatten out. There's where that first stage comes in. So there's a lot of work in reverting the trend. Step 2 is establishing resistance, which you would normally think at 41, but you're still in the band flattening stage, and you can see on this period here, that's pretty weak because you got up to this point, and this red candle down, yeah, whatever, but on a bullish level, you don't follow it up with these two periods, and then this red one down to the 18 lows. That is just it's a bearish setup. And then there's the moves back down. And last time you made it to 26, or the first time you had a quick move higher. Then it comes back down. Then another quick move, quicker than before, further. But here you're seeing 26 congest within that area as the low. That's weakness. 18 average declining. Okay, maybe this will work then. But it's extremely important now for like 28 and change to hold. Did I say 28? I'm going to say 29 and change now because it got above this level. Okay, so the 18 average of lows is the 29 and change. So important to hold. Breaking above this resistance, ready to go off. Very much a huge reason to be bullish now. Okay, the must hold spot. Must hold, must hold, must hold. Okay, going higher, getting a little bullish. Ooh, yikes. Back down to the must hold. And there it's not holding. And it falls. And the fall goes to 1850, and of course we continue on within this downtrend. Support established in around 18 and change. That was long, going sideways in there, but now support's broken, so you'd be thinking of a big move, probably down closer to about 13. It doesn't quite go there, but it does go 14. Still in this bear market, though. And we can see now before how 18 was key. Now we see how 14 is key, and it's at this stage not holding well, but it makes its first move above and holding above this 18 average at this time in here back in March of 2016. It was the first time since when it was like 30. There's your coming back to support. There's breaking of resistance, which made it bullish. But it didn't hold. There's a failed breakout. Oftentimes from failed moves can bring fast moves to the downside. And well, it's just grinding along, getting kind of boring. And that's where we stand. Just grinding along, getting kind of boring. Which is why there's really not much to cover on this at this stage. It only breaks the boringness when it can hold and stay above 18 on the upside. It only breaks the boringness to the downside if it can show any holding and stand below this 16 and a quarter approximate level. But with price action at around 16 and a half up to about 17 and a half, the market we can see is very boring. With the resistance established in here, because this is the first attempt, like I stated, since 2012 of reverting the trend. It's done a lot of this coming back to the band, and you can see it more clearly when we take a look at this on the monthly term time frame, where you flatten the band, you come in here, establish a resistance, but this is now 1, 2, 3, 4, 5, 6, 7, 8, 10, 11, 12, 13. This is the 14th month right now in the correctionary mode of this attempt to break resistance. Throw in another 6 months beforehand. This has been close to 2 years of the attempt in this reversal. It's such a slow purchase. It does mean if you're looking to accumulate, the prices stay stable, generally low. And if you're writing some sort of asset class higher to buy it with, aka cryptocurrencies, aka Bitcoin, then it becomes even much cheaper than that. But as I was showing in this example, when these things have broken resistance, wow, do they ever go? And it's really a matter of when, not if. And this is just showing you that the whens can sometimes take a long time. Take care.